As a financial advisor, I'm a huge Roth IRA fan. If you've seen my videos before, you know that I try to work something in about a Roth in almost all of them. Here's the thing. If you make too much money, you aren't allowed to contribute to a Roth IRA. I'll break down the limits in the video today, but have no fear. Even if you're above the limits we're going to talk about, at the end of the video, I'm going to touch on two strategies that may allow you to get money into a Roth either way. So first things first, the first limit on a Roth is how much you're allowed to put in. Now, this isn't a video about that, but I'm going to cover it quickly anyway because it's important to understand. As I record the video here in 2024, if you're eligible to contribute, which means you have earned income and you're under the income limits we're about to talk about, you can put away $7,000 into your Roth IRA. Now that's per person per year. So if you're married and you both have a Roth, you can do $14,000 between the two of you if you're under the age of 50. If you're over the age of 50, you're also allowed to make a catch-up contribution. That's run fast and catch up, not like I put the ketchup on my hamburger. That amount is $1,000 per person for the year. So in that case, over the age of 50, the individual limit is $8,000. Now on to the income limits. Now this is something that's called the Roth IRA income phase out. Basically, up to a certain point, you can contribute the full amounts we just talked about. Once you pass that lower limit, how much you contribute can start to go down. So the amount that you're allowed to put in will go down until you hit the upper limit. Once you hit the upper limit, you can contribute nothing, zero, nada, zilch to a Roth IRA. I'll talk through the limits right now, but I'm going to put it up on the screen because it gets pretty number heavy. It might be easier for you just to see where you're at. So if you're a single filer in 2024, the lower threshold starts at $146,000 of modified adjusted gross income. That means once you get north of $146,000, your contribution limit starts to drop until you hit $161,000. At that point, no contribution for you. If you're married filing joint, which is the way most married couples file, the lower limit is $230,000 modified adjusted gross income, meaning if the combined income is below that, you can both make full contributions. The amount you can put in drops until you get to $240,000, at which point no contribution for you. Now, here's something to watch out for. I'm going to put something flashing in red up on the screen here to get your attention. If you are married, but you file separate returns, married filing separate, you're basically screwed because even if you have $10,000 in income, your contribution amount is zero. Basically, they don't want people skirting the tax rules and filing separately to show lower income levels and then be able to take advantage of Roths. And so they've kind of eliminated it. Why is that? My personal guess is this: Roth money is some of the most powerful money in our financial system. Once the money gets into the Roth, not only is that money tax-free, but all the future earnings from that money are also tax-free. That's why we have contribution limits in the first place, because they want you to save money and put away money, but they want to be able to tax those dollars, those gains. And so if there were no limits on this sort of thing, people would just sock every last dollar they had away into a Roth IRA, and then they'd cut out the IRS from tons of future tax revenue. Obviously, that's not good, and so they put these limitations in place. Hey, if you're enjoying the video, two things for you. One, subscribe to the channel. Come on back and learn some more stuff about retirement with us. And two, if you want to be clued in on the latest tips and tricks and trends, join our community by subscribing to our email newsletter in the link in the description. We send out timely information on things that are going on. You'll also get invites to special events like webinars and things like that we put on. Now let's get to the good news. As I said, even if you're above these limits, all is not lost. There's still the potential to get money into a Roth. I'm going to quickly touch on two strategies that you should be aware of. The first one, are you covered by a retirement plan at work, like a 401k or a 403b? Most of them offer a Roth option these days, meaning you can elect to have your contributions go in post-tax, grow tax deferred, and be tax-free in the future, Roth, but inside of your 401k or your 403b. And these plans have no income limits. You can put away whatever money you want regardless of how much you make. That's the easy way. I got a video about that. I'll link it here in a second. Now maybe you're like, hey Antonio, great advice, except I don't have a 401k or a 403b. You still might be able to get money into a Roth using something called a backdoor Roth conversion. Now, this is different than the run-of-the-mill Roth conversions I talk a lot about on the channel. If that's you, I've got you covered as well. I'm going to put up both videos. I'll put them up here, there. I don't know. Normally, they always go up here. We're going to put them where we put them, and I'll see you on the other side.